answering your questions about retirement. It's Money Talk with Michael Eastham.
My wife and I have lived in the same house for 30 years. We have no mortgage, and it's worth about $800,000. We don't plan on moving, but I hate to see all this equity trapped in the home, and it's more than we need. We are both retired and don't need any more income right now, but with high inflation, that could change down the road. Would it make sense to downsize and invest the cash, or consider a reverse mortgage?
It's always good to hear that you're confident in the amount of income that you have for retirement. That's always a good statement for today, but you also have to think about it down the road. And congratulations on having a paid off home with a lot of equity in it, because that can be a tool for you at some point. It can certainly be an inflation hedge. You could also consider what are the alternatives that may benefit us. I think a lot of it is going to depend on what your income needs are when you get a little older, right? Maybe you get into your late 70s or early 80s and you just don't have the income that you need, or you have a long-term care event. The good news is you do have a lot of equity in your home. That could certainly be a source for long-term care if you wanted to self-fund for that. But downsizing right now may be a little bit tricky because home values are so high. And I've talked to a lot of folks who have thought about downsizing, but when they look into selling their house, then moving into something a little smaller, well, the values of those smaller homes have actually increased in value as well. So you end up kind of going sideways or getting something that you're not quite content with. Now, about the reverse mortgage could be a decent tool if you get into a situation where you really need the extra income and you don't have any other sources. However, there are some gotchas with reverse mortgages in that they do cost more money than just a traditional mortgage, so you have to be aware of that. Typically, the interest rates are going to be variable. And then also, of course, it's going to affect your beneficiaries down the road, because when you pass away, they're going to have to refinance that house if they want to keep it and rent it out maybe, or they'll have to sell it. So a couple of things there that you can think about. The nice thing, of course, about a reverse mortgage is, yes, you can tap into the equity in your home, and basically it doesn't cost you anything at that point, but it does have a cost to it. You've got to count those costs, and I'd be happy to talk to you further about it in detail to see if a reverse mortgage may be right for you at some point down the road. Doesn't seem like it's really necessary at this point, but it's great to be proactive. So thanks again for that question.
If you've got a financial question you'd like to have answered, click on the link below to submit your question. You may hear your answer on an upcoming edition of Money Talk.